You're listening to Real Talk Texas with local expert Steve Hakes. Now, here's Steve.
Welcome back. I'm Steve Hakes. I'm your host, and today we're talking about the mortgage industry. We're talking about what's happening at FHA, what's happening at Fannie Mae. We've got some new things and some new news that's really come out in the last week or so, and everybody's trying to digest it. And, of course, the government's giving us some time to adjust our business models and how we go to market with mortgage products. And that's all going to take effect on January 10th, 2014. So I want to get right into that because there's some things that we need to drill down. I think the average consumer needs to know what's happening here. You know, and we've got some game-changing things that are happening within the mortgage industry through the Dodd-Frank ability to repay. They call it ATR. Of course, we have acronyms for everything. But the ATR regulations, it's an 804-page document that was just published and is scheduled to go into effect January 10th, 2014. These broad sweeping changes will expand the risk to lenders, okay? It's going to make it more risky for lenders to do loans on loans that are designated non-qualified mortgages, okay? Or even well, I guess, yeah, because if it's a qualified mortgage, then we don't take on as much risk because it falls into those guidelines. And basically what's going to happen is the CFPB, which is the Consumer Finance Protection Bureau, they're going to govern this. And they've just recently published the rules and the guide to the rules that fall underneath that Dodd-Frank Act, which is, and there's a specific area called the ability to repay. So, yeah, we're the biggest thing that we're going to look at there is it's going to cover how we give loans to consumers, okay, and what kind of risk that the government feels like we are allowed to do. Now, for now, all the government loans are exempt for this, okay, so any FHA, VA, Fannie Mae for a temporary time frame, those are going to fall into an exempted status, all right? So they're going to be exempt from this rule for a period of time, but not for long. So everything's going to kind of have to go over to this area. So what's that mean to you as a consumer? All right, so it's going to cover all consumer loans, all dwellings that are your principal residence, your vacation homes, your second homes, on purchases, and here's the critical part, on refinances. So let me explain that a little further. It's going to be for your first lien on your home if you got a first home loan. If you do a construction or a home equity line of credit as a second lien on your house, it's going to affect that. But here's one of the biggest things. I mean, wait till you hear the rules on this. I mean, some of the guidelines on this qualified mortgage make it very difficult for certain people out there that are trying to get loans. And what I mean by that is there is a cap on the debt-to-income ratio, which normally right now, if I do a Fannie Mae loan, I can go up to 45% DTI on the back-end ratio. Back-end ratio means it's all your housing expenses. It means your principal, your interest, your taxes, your insurance, your mortgage insurance. All that payment, that's really adds up to what your housing expense is. Then you want to add any car payments, any installment debts, any revolving debt you might have out there. If you add up all those monthly payments, you take that total and divide it by your gross income, okay? So I can go up to 45% of your gross income for all your debts going out, okay? So I think that's reasonable on FHA. Sometimes it'll go up to 55%, okay? But what I'm concerned about is the reason I think that's reasonable is because we're talking about gross pay. So you got to take your taxes out of that. You got to take your health insurance out of that. So you have basically at the end of the day 10 to 20% left to pay for all your food and groceries and spending and things like that. So there are some budgeting things we can talk about on another show on how to really set yourself up correctly so that you're living a comfortable lifestyle. My recommendation is that back-end ratio should not be more than 36%, but we are allowed to go up to 45%. And there are certain instances that I think that's okay. And one of those instances is for self-employed borrowers. People that have their own companies that maybe write off certain things that they're allowed to write off through the tax codes, that may end up hurting them when they go to buy a house. But even bigger yet, if you go to refinance your house, you're already making payments, and you get an opportunity to lower your payment, and you may not qualify under the QM rule. And I just don't know that that's fair. I mean, if I can show that they're already making their payment, they got excellent credit, and now we've got an opportunity to lower their payment, and I can't qualify them because maybe they're in a jumbo loan. And jumbos are falling out of conventional loans, falling outside. They're more than $417,000 in loan. But if you've got a $500,000, $600,000 loan, and there are a lot of people in North Texas that have those loans, and you're self-employed, it may make it difficult in January 10th of 2014 or beyond to refinance your house because you can't prove up your income side, and we won't accept it the way maybe you're presenting it. And so today, we're gonna lower that to 43% total debts. Well, I will tell you that there's sometimes that our bank will go up to 60% because we see what a self-employed borrower really is doing. We analyze cash flow. We look at things a lot differently. So that's where this rule may even affect our Make Sense mortgage at affiliated banks, which we love to do for people that are self-employed. It may have a large loan. They can't document their income the way they do, but they've got strong assets. They've got good credit. We can still put them in a loan program to help them buy that new house or build that new house. So these new rules will affect us as well. And sometimes we'll do a loan at 60% because we're counting their current mortgage against them while they're building their house, things like that. Or maybe they're an investor and they've got several properties and they have cash flow and they write off depreciation and they do other things on their taxes which are totally legal. But under these new guidelines, will make it tougher for us. So we're trying to sort through that right now and figure out exactly how that's going to affect our offerings. I'm telling you this now because I want you to know that 2013 is a great time to buy a house. It's a great time to refinance your house. We're still in that we're doing very well in North Texas, but the whole country hasn't caught up, so the markets haven't really made that kind of inflationary move yet. Home prices in North Texas are already going up, so yeah, we're seeing inflation there. But as far as doing a refinance on your house today, especially if you got a jumbo loan out there, you need to contact me today before this January 10th hits and things start to change. So go ahead and put in my number. Text the show at 817-925-2546. That's 817-925-2546. And just send me a text message as to how I can help you out. So speaking of the Make Sense Mortgage, if you're not a regular listener, you may not know what exactly that is and what I'm talking about. My history is I've been in the mortgage business for 14 years. My wife and I, Dana, we owned Liberty Lending in South Lake, and during the mortgage meltdown, that company went away. We were doing commercial loans for a while, and then we joined up with a bank, affiliated bank, recently in the last year. And it was after meeting everybody at the bank and understanding that they had this product that I felt was really fitting a niche out in the marketplace that no one else in DFW is offering. And that is called the Make Sense Mortgage. Now, the Make Sense Mortgage is for somebody that's going to put at least 10% down, maybe 20% down is really where we're more happy, and we give a better rate for that. But moreover, it's really based on what Gary Graham, our CEO and president, says. It's for the tweeners. It's not a subprime loan, but we can't get you placed in an agency loan. So if you're out there and you've been recently turned down by your mortgage company or getting frustrated with your mortgage company, and because maybe you're that unique person that you have a certain way of documenting your income, or maybe you're someone that's recently did one for an attorney that he had worked for the same law firm for 5 years. He just made partner, very excited about that. But along with becoming a partner, now he's a 1099 guy instead of W-2, and he's actually a partner in the law firm. So based on the guidelines of Fannie Mae, he doesn't fit because he has to have 2 years of self-employment history on his tax return. So that was really holding him back from actually, it was kind of a weird situation. He was building a house and got the promotion. So when he went to get his new loan and get a permanent loan on it, he couldn't qualify for it. So he got a hold of us at Affiliate Bank. We put together a loan program that's a bank program. It's kind of a place to go for a little while until you can qualify. So he gets his 2 years of tax returns in through the IRS so that we can take him to an agency like Fannie Mae or Freddie Mac. But in the meantime, we got him into his house. So if you're listening out there and you're in that situation, or maybe you had a bankruptcy that's keeping you, and maybe it's aged 2 or 3 years, and you're just out inside of that guideline, and you just can't get an approval from your mortgage company, go ahead and pick up your cell phone, text this number, 817-925-2546. And if you're driving, please don't send a text. Go ahead and leave a message. I don't want anybody getting any accidents out there because they were trying to text Real Talk Texas. So go ahead and just call and leave a voicemail to me, and we'll put you in touch with the right people in our office to help you out, or I'll help you directly myself. That's what we do here. We really just try to help people solve the problems. That's what I love about the mortgage industry, even though it's been challenging, is it makes you think. There's a lot to know. There's a lot of ways to go through a loan process. It's a very difficult business, but if you've got the knowledge and you've got the experience, it's a fun business because you can be the person to figure things out and help people get into a home, maybe resolve their financial problems that they're looking at right now. A lot of people that think they can't refinance because they've been told that by a mortgage company based on certain things that happened on their credit report or the way they do their income. You need to pick up the phone and call us. You really do, because we have products that nobody else has. That's 817-925-2546. That's 817-925-2546. And after the break, we're going to dig into a little more about, I'll give you some examples of these Make Sense mortgages that we do. And I'll even finally share some information about the Carnival Cruise where Dana and I were on. So stay tuned. You're not going to want to miss this. You're listening to Real Talk Texas, KLIF, AM 570 News and Information.